Top 10 questions small business owners want answered. Hi, this is Kathy Bukowski. I'm the owner of CB Health Insurance, and this is the CB Health Insurance Small Business Benefits channel, YouTube channel. Today we're going to answer what are the top questions small business owners want to know with regards to employee benefits, okay? Number one, how much will health insurance cost my business, right? And there's a couple of factors. One is, what is the employer going to contribute? And you can do different amounts. You can pay a percentage towards the employee rate. You can pay a percentage towards dependent. And oh, by the way, that can be different. Or you can just pay for the employee. Another way to make sure that your costs are capped, because a lot of people worry about annual rate increases. Okay, this is how much I spend today, but what's happening down the road? Well, if you do what we call a defined contribution, and I've had some people switch, start off with, oh, we're going to pay 50%, and then they go to a defined contribution. Here's $250 a month to buy benefits. So that is one thing you need to take a look at. How much are you willing to pay per employee, or can you afford to do a defined contribution for health insurance, okay? Second question of the top 10 that people ask, am I required to offer health insurance? And this is probably number one. There are a lot of people that are going into business for themselves and they want to know what the rules are. So the Affordable Care Act, the ACA law that was passed back in 2010, also referred to as Obamacare, right? It actually stated that employers that have 50 full-time equivalent employees or more, what does that mean? 50 full-time equivalent or more must offer health insurance, or they will face fines and penalties. Now, what's full-time? They define it in the law, 30 hours a week. And full-time equivalent means if you have a 15-hour a week and a 15-hour a week person, that's two. They're part-time, they're not eligible, but together they equal one full-time employee. So 50 hours or more required to offer health insurance. Less than 50, you're not required. If you are confused in any way, talk to a broker, and there's calculators out there. So they do aggregate for parent companies, or if you have multiple companies. So be careful, but definitely 50 employees or more, you have to offer it. Under that, you do not have to offer it. Question number 3, what are my options to offer health insurance? Well, you can go the traditional route, which is fully insured. In the small group ACA marketplace, they do have fully insured coverage. It can be more expensive. Option number 2 is what they call level funded. It's built on the concept, and we're talking about the small group marketplace. So let's assume all the employers they have less than 50 employees. In the small group marketplace, fully insured is number 1, level funded is number 2. It's built on the concept of self-funded, but it really caps the liability of the employer. This is not great for everybody because, and I talked about it, should I consider a level funded plan? It is fully underwritten. They can either accept you or decline you. You have to be a healthy group to move to that. You could save some money, but oh, by the way, if you have a really bad claims experience, you could have a very high rate increase. So be careful of that. That is not for everybody. And last but not least, so we have traditional insurance, traditional fully insured, level funded, and an ICHRA. And we talked about ICHRAs before and it's an individual coverage HRA, health reimbursement account. You're giving money to the employees and they go out and shop the individual marketplace. So those are the options. Number 4, how do I attract and retain employees without breaking the bank? When you're a new business starting out and you're hiring employees and you want to attract them, everybody wants benefits, right? And benefits can be health insurance, they can be voluntary, they can be other things. We talked about it's not just insurance products, right? I did a video on, and employee benefits is not just health insurance, right? It can be flex hours, it could be other things that you do, bonuses. But if you are concerned, you can start off with a defined contribution. towards the health insurance, or a defined contribution towards all benefits and offer a smorgasbord. Here's health insurance, dental, and vision. Or do a defined contribution and do voluntary dental. So if you're trying to attract, start slow and you can add more benefits later, but it's not just health insurance. You can do other things. Okay, number 5 question employers want to know. What percentage of the premium should I pay? Should you pay? Well, I've seen it all over the board from 100% down to 25%, but there are some requirements. In the state of Illinois, Blue Cross Blue Shield of Illinois does require employers to pay 25% of the employee premium only, not for dependents. But an employer could, depending on the demographics of your employees, if you wanted to, you could pay a certain percentage for the employee and a different percent for the dependent, spouse, kids, whatever. So for example, you could pay 75% or 50% for the employee and a lesser amount, 25% for dependents. Entirely up to you. So what should you pay? You should pay something, and usually there are requirements if you're doing a fully insured group, okay? Question number 6, can I deduct the premiums or get a tax credit? The answer is 100% yes. Any portion that the employer pays is 100% deductible. It's not a tax credit. Now, when the law was first passed, ACA was passed in 2010. It was implemented in 2014. It created the marketplace, and they were supposed to create a marketplace for individuals and a marketplace for small businesses. The small businesses never kind of got off the ground. There was a tax credit given if you offered this, but it was basically like an ICRA is today. You give money to them, they go shop on the marketplace. There are no tax credits today. What you have is you pay a premium and you can deduct it. Okay, so it is deductible to the business. Number 7, what plans do my employees want if I am offering this? So do I offer a PPO or HMO? I did a video on that. Do I offer a low deductible, a high deductible HSA qualified plan? Do I offer, if you ask 10 people what is the best plan, you will get 10 different answers. One person might say lowest premium. Next person might say, I want a low copay if I go to the doctor. I want the best drug card. So my advice to employers is offer an option. If you are not paying 100% of the cost, give them a range, give them options so that they can choose, because perception is reality, and you don't want to pigeonhole employees into a plan they don't like. So give them options. Number 8, what happens if an employee has a large claim? Am I going to get stuck and get this huge rate increase? Well, if you're on an ACA plan, fully insured plan in the small group marketplace, you don't have to worry about it because they capped it. It's called community rates. So everybody in that area, in that zip code that's buying it gets the same rate increase, right? So that could be good, that could be bad. Now, if you're on a level funded plan, which is not fully insured, well, it's based on your claims experience. So what they do, they cap the liability to the employer. They have so much money for the premiums, and they sort of have a slush fund for claims. However, if the loss ratio, if you have more claims than you have money in the pot, 1, you're not going to get money back, and 2, you can get socked with a really big rate increase. I had a small employer, manufacturer, that had about 14 employees. We save a ton of money going to a level funded plan for about 3 years, and then they got socked. Big claims with a 50% rate increase. So that was no bueno. Number 9, we're almost there. We're almost to the end. How difficult is it to administer these plans? Well, first and foremost, health insurance is very simple. You get one bill and you pay it, right? And you can do it online. Most insurance companies offer employers things like a portal where you can add employees, remove employees, add dependents. You can pay your bills. You can do a bunch of things. However, if you work with a broker, our office does this for you. We assist, and we get paid a commission by the insurance companies, but that's what we're there for, is to help the employer with all these things. You don't have to do it. We once took over a group, a family-owned business, Tannery in Chicago, that had set up their group initially with a broker who said, there's the portal, you go do it yourself, you download the renewal, and she collected a commission and never serviced the group. And I was like, wow. Not most brokers are not like that. But we took over the group, and I said, not only will we add people, delete, remove people, add dependents, we will download the renewal, we'll have a renewal call, we'll go over options, we'll provide you information if an employee leaves or is terminated about Illinois continuation or COBRA. That's what a broker should do. So anyways, how difficult is it? It's not difficult at all. Last but not least, here we are, number 10. How can I lower my health care costs? Well, that is the question everybody wants to know. You can change your contribution. I had a small group. They started off 50-50 contribution towards the employees. They got some big increases. A bunch of people dropped off. We had older individuals on the group. And long story short, they did a defined contribution. They went from 50% to here's $250 a month or $300 a month. That's number one. You can offer lower cost plans. And I always talk about giving people a choice. So, don't just offer the richest plans. You can add plans. I know some carriers will allow you to offer up to 6 plans or a wide variety of plans. Offer plans in different price points. So if you are getting a big rate increase and the employee is going to be absorbing most of that, if you're doing a defined contribution, you want them to have a lower cost option. So if they're in a gold PPO, offer a silver PPO. In the small group marketplace, Obamacare, it's bronze, silver, gold, rusty metal. That's what it is. So a silver is cheaper than a gold. If they are in a rich benefit plan, offer a high deductible HSA plan and maybe talk to them about making contributions to the HSA bank account. If they're in a PPO, look at an HMO because that's typically a lower cost. So offer options so that it not only, if you're doing a percentage, that's going to lower your cost if an employee moves from an expensive plan to a lower cost plan. And here's another idea. You can offer a wellness program. Some of those cost money. Certainly shop the marketplace. You should be talking to your broker once a year and reviewing the options. And the bottom line is, the 10 questions that small business owners have about employee benefits, the best way to get them answered is talk to a broker. If you have any questions whatsoever, feel free to reach out to us. Feel free to leave a comment. We thank you for watching. Until next time, this is Kathy Bukowski, the owner of CB Health Insurance. Thank you for watching.